If you want to outperform professional hedge fund managers, enjoy amazing diversification, and pay next to nothing in commission fees, then you might want to consider investing into Logan Paul's NFT collection. Wait, that's not right. Something's gone wrong here. Bear with me for a moment. Okay, no, it's actually index funds. That's right, index funds is the investment we're talking about today. But don't let me talk you out of investing into Logan Paul's NFTs. I mean, if you want to buy an Adobe stock photo of a penguin shark for an easy 1 mil, then be my guest. But for real this time, today I'm going to give you the 7 best Vanguard and Fidelity index funds out there on the market that you can invest in today to start building wealth the right way. There are a lot of important factors to consider when selecting index funds to invest in. These include the expense ratio, volatility, market cap, asset allocation, and historic return. And I get that making sense of all these things can be confusing if you're a beginner investor, so lucky for you, the Vanguard and Fidelity index funds on my list rank amongst the best out there across all the criteria I just mentioned. But before we get into all that, make sure you go like the video down below. If we can get to 200 likes on this video, that would be amazing and a nice little goal to hit for us. You can also purchase all of the ETF equivalents to the Vanguard index funds I mentioned in this video conveniently in one place using the Webull app, and receive 5 free stocks by using my link in the description below. When I opened my Webull account, I got $28 worth of stocks for free. So honestly, it's a really good deal and costs you nothing. But if you would prefer to purchase the index funds directly from their providers, I've also included links to each index fund individually. Anyways, let's get right into it. Coming in at number 7, we have VIGAX, also known as Vanguard's Growth Index Fund. This index fund was designed to track the performance of large US stocks in market sectors that tend to grow more quickly than the broad market. Currently, the fund holds 266 large cap growth stocks in the United States. This is a fantastic option if you are willing to take on a bit more risk in the pursuit of higher rewards. The reason I say this is because growth stocks invest most of their spare cash back into the company in an attempt to further grow the business. This generally results in greater price appreciation for the stock over time, but it's also more risky, and these stocks tend to get hit harder during a market downturn, which is why Vanguard gives this fund a risk rating of 4 out of 5. You can see here that the fund's largest holdings are massive tech companies that you would have heard of, like Apple, Microsoft, and Amazon. VIGAX has averaged an annual return of 14.79% over the last 10 years. That means that if you had invested $10,000 into this fund 10 years ago, your investment today would be worth roughly $39,723, assuming that you didn't cash out any of your gains to allow for maximum compounding on your investment. This fund also has a very low expense ratio at 0.05%, meaning that on an investment of $10,000, you would only pay $5 a year in fees. These fees are used to basically pay for operational costs of the fund. Coming in at number 6 on my list, we have FSPSX, which is Fidelity's International Index Fund. This is the perfect index fund if you want to gain exposure to stocks outside of the US. Maybe you think that today's 8.5 annual inflation and interest rate hikes are getting to be a bit too much, so you want to diversify your portfolio away from the US stock market. Well, this fund offers global exposure to 837 stocks outside of the US, and some of its holdings are companies that you would have likely heard of, such as Nestle, Shell, and Toyota. You can see the portfolio composition here. The highest proportion of stocks are European, followed by Japan and the Pacific. FSPSX has averaged an annual return of 5.82% in the last 10 years, meaning your $10,000 invested 10 years ago would be worth around $17,607 today. I know what you're thinking. A 5.82% average annual return in the last 10 years is a lot lower than most of the other index funds that invest into primarily US stocks. But for the sake of diversification, you should still allot part of your portfolio to international stocks, which will benefit you if something bad happens specifically to the US economy. I feel like if you put 10 to 20% of your stock portfolio into international stocks, you're probably good. FSPSX also has an incredibly low expense ratio of just 0.035%, which means that you would pay about $3.50 annually for every $10,000 invested into this fund. At number 5, we have VGSLX, or Vanguard's Real Estate Index Fund. This fund invests into real estate investment trusts, which are public real estate companies that purchase office buildings, hotels, and other real estate property. Every good investment portfolio should be invested in multiple asset classes, not just equities. So this is a must-have for your portfolio as it provides you diversification outside of stocks and into real estate. Currently, this index fund holds 164 real estate companies, including the likes of Public Storage and Simon Property Group. The fund has returned an average of 8.92% annually over the last 10 years, meaning making a $10,000 investment into this fund 10 years ago would now be worth $23,500. VGSLX also has a very solid expense ratio at 0.12%, so you would pay $12 annually for every $10,000 invested into this fund. Moving on to number 4 on our list, we have FZROX. This is Fidelity's Zero Total Market Index Fund. This fund seeks to track the investment returns of a broad range of publicly traded companies in the US. In simpler terms, it basically tracks the performance of the entire stock market. Currently, this fund holds 2,661 stocks, which are mainly large cap stocks. This fund was created in 2018, so we don't have a 10-year annual return we can look at, but its average annual return since inception is 11.82%. And one of the best things about this fund is that it has a 0% expense ratio. Fidelity introduced this, and a number of other 0% expense ratio funds, to try and compete against the market leader Vanguard. Their hope is to attract new investors to invest with Fidelity rather than the more well-known and established Vanguard. In fact, Fidelity makes it clear with big bold writing on its website that says there's no match for Fidelity in index investing. Not even Vanguard, whilst directly comparing all of its index funds against similar ones at Vanguard, highlighting the fact that it has lower expense ratios. And clearly, this has worked out very well for Fidelity, because this has become a very popular index fund in the last few years. At number 3 on my list, we have VFIAX, also known as Vanguard's 500 Index Fund. This index fund was designed to track the returns of the S&P 500 by offering exposure to 500 of the largest US companies, which span many different industries and account for about 3/4 of the US stock market's value. The exact amount of stocks that this fund currently holds is 506. In comparison to the total stock market index fund I just mentioned, this one has an even greater emphasis on investing in the largest of companies. You can see here that 30.4% of its total holdings are held in just 10 stocks, which are mainly tech stocks such as Apple and Microsoft. VFIAX has averaged an annual return of 13.63% over the last 10 years, which is one of the highest 10-year returns on this list, and an investment of $10,000 made 10 years ago would now be worth $35,886. This fund also has a very low expense ratio of 0.04%, a cost of only $4 annually for every $10,000 you have invested. Coming in at number 2, we have VTSAX, which is Vanguard's Total Stock Market Index Fund. This is another index fund that tracks the performance of the total US stock market. This is such a great index fund because you get the most amount of diversification possible. The fund invests into large, mid, and small cap stocks across growth and value styles. And in total, by investing into this fund, you receive exposure to 4,124 stocks. You can't get much more diversified than investing in basically the entirety of the US economy. And you can sleep soundly at night knowing that the only way your investment can fail is if the whole US economy fails. And in the case that that happens, well, we're all going to be screwed then. VTSAX has averaged an annual return of 13.24% over the last 10 years, meaning an investment of $10,000 made 10 years ago would now be worth $34,674. And this fund also has a very low expense ratio of 0.04%, a cost of only $4 annually for every $10,000 you have invested. Okay, so now the moment you've all been waiting for, let's talk about the best index fund on the list. Drum roll, please. And that is FNILX, also known as Fidelity's Zero Large Cap Index Fund. This is basically just Fidelity's S&P 500 index fund. Now, the reason why it has a weird name and doesn't state S&P 500 in the title is to avoid paying a commission, because in order to use the phrase S&P 500, Fidelity would have to pay a royalty fee to Standard & Poor's. So to get out of paying that fee and keep expenses as low as possible so that they can pass on that benefit to us investors, they don't explicitly state that it's an S&P 500 index fund, even though that's really what it is. FNILX currently holds 518 stocks and was created in 2018. So once again, this fund doesn't have a 10-year return we can look at, but its average annual return since inception is 12.08%. And of course, this fund also has a 0% expense ratio, so you won't be paying any fees whatsoever. But that's it for today's video, guys. I hope you enjoyed. If you did, feel free to leave any sort of thoughts down in the comments below, and make sure you like the video as well. Like I said, let's try to hit 200 likes. It really helps out, and I'll see you in the next one. Take care.